GM, good morning. Welcome to the Milk Road Show, the daily crypto show for markets that feel less predictable than your toddler's nap schedule. I'm your host, Jay Hamilton. It's Wednesday, April the 23rd. Wow, what a rally. Green markets. The markets are green. Everyone is feeling good. But please remember, y'all, we are still in macro mayhem. So you should expect continued volatility from here. Now, today we have a very exciting show. We are joined by a pivotal figure in cryptography and Bitcoin's history. He's cited in the original Bitcoin white paper. Some speculate that he might be Satoshi himself. I'm talking about Adam Back. Currently, Adam is the CEO and co-founder of Blockstream, a leading Bitcoin infrastructure company. Today, we're going to discuss with Adam early Bitcoin stories, when Adam first met Satoshi, what it was like working with him in the early days, Bitcoin's 200-day moving average just passed $46,000. That's a big milestone. What does that mean? What does that signal? Adam recently was in Paris for Blockchain Week, and he talked a lot about institutional adoption, what is happening with central banks buying, sovereign wealth funds buying. We're going to get an update from Adam on where he sees institutional adoption now and in the future, and what does that all mean for Bitcoin's price from here. Now, before we jump in, I've got to tell you guys very quickly that we are doing something really bold at Milk Road, because we've got serious conviction in our thesis that we are still in a bull market, and this is just a pullback. And all of our indicators on the macro side are saying to us, we are going to come back. Now, obviously, we need to see what Trump does, but we're watching very closely and we're willing to bet on it with real money. So if you join Milk Road Pro by May 1st, you get 20% off for the year. And also, if you stay subscribed until October 31st and Bitcoin is not at an all-time high, we'll give you a refund. Okay, we'll give you a refund if we're not an all-time high by October 31st. Now, today's episode is brought to you by MoonPay. Trade crypto fee-free, fast, and on your terms. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin CSUSDL. Without further ado, Adam, welcome to the Milk Road Show.
Hi, thanks for having me on.
Absolute pleasure to have you. Okay, I've got to start with when everyone comes into Bitcoin, there's this saying that everyone has, which is like, I'm too late. Bitcoin's already at 100K. I'm too late. That feeling seems to be a prevalent feeling. I know my friends, my family, everybody outside always says that. And I want to go back to a post that you shared recently on your Twitter, which shows that apparently you had the same feeling back in 2013 when you first introduced yourself on a Bitcoin forum. And you commented that you had less Bitcoin than Hal Finney at the time, and you were a little bit feeling like you might be too late in 2013. What is this feeling of everybody being too late? Where do you think we are? Are people too late, or are we still really just so early?
Well, it's a bit of a fractal experience. Like, people assume that it was different 5 years ago or 10 years ago, but it's just the same. It's just the numbers were percentage-wise smaller. And in my case, one of the reasons I was thinking I was late is that I actually knew about Bitcoin from like August 2008, right? So I got the first email from Satoshi, only ever interacted via email, and not that many emails that are published later. And yet, everybody has their regret story, right? And so my thought was, well, this is cool. He solved the remaining problems on how to build a decentralized eCash system, which people like Hal Finney and myself had tried to do in the past, and so that I was just waiting for it to bootstrap, basically. So that's when I didn't get involved until sometime in 2013, I think.
Can you just explain quickly to us Hashcash, which you invented in the late 90s, and what role that played in the development of Bitcoin?
Yeah, so it was kind of developed in the context of, well, it was trying to combat spam, so the kind of postage stamp, right? And it was to do with privacy. So there's a system where you can send emails anonymously, and people would spam through it. And so the the challenge was there was no electronic cash. If there was a working electronic cash like Bitcoin at the time, the obvious thing would be you pay a few cents to send the mail, and the spam gets more expensive to do. But there's no eCash, so I was trying to find something simpler than eCash. It was hard to design a distributed eCash system, and people had seen the centralized one fail at that time, so they were trying to figure out how to do it decentralized. And so what I found was, well, making a respendable eCash is hard, but to make a postage stamp that is not respendable was achievable. So that's what I did, and that became used for sort of email anti-spam, but also because people were at that time brainstorming about how to design a decentralized eCash system, because they'd seen DigitCash fail, because it's a central system. It immediately caused conversation, like within days, by multiple people, that Hashcash was a bit like digital scarcity, digital gold. And so, by about a year later, Nick Szabo proposed BitGold, and Waydai B-Money, and later in 2004, Hal Finney implemented a centralized but proof of work-based system called RPAL, Reasonable Proof of Work. So after Hashcash, all of the designs, the BitGold, the B-Money, the RPAL, and eventually Bitcoin, were using Hashcash because it was the only sort of decentralized way to bring coins into existence without needing a relationship with a bank or something, right? Which is difficult. They might not be interested in giving you a bank account, or they might cancel it at any random time.
It's so interesting, the language that you use that is no longer the language. Like eCash is not a word that continued, but that was the early word. We had email, and so you guys were all thinking, well, eCash, that's what crypto has become, obviously. I've got to ask you the direct question, because my listeners will yell at me if I don't. You were one of the first to get an email from Satoshi, at least as far as we know. Are you Satoshi Nakamoto?
No, I'm really not. I mean, obviously, it's a fascinating topic because it's such a novel situation, right? That the founder of a major internet phenomena is anonymous and stayed that way. So people, of course, are curious and speculate about, people who are developers, people who are interested in previous electronic cash systems, or coders or cryptography guys. And, there are a number of people like that. I'm one of them, so of course they speculated, but it's not me. No.
It's not you. So in 2008 was when you first got an email from Satoshi, and when you first started participating and working on Bitcoin?
Well, no, he did. I think he didn't actually collaborate with anyone, because in 2008 August he sent me a draft white paper, and later on the forums I went and read. So 2012, 2013, I went and read all of his old posts, and he'd already left the forums by then, right? And somewhere in that scroll back of Satoshi kind of forum posts, he says that he'd been working on Bitcoin for a couple of, the only way, he wrote the code before the paper to prove to himself that it worked. Some comment like that, right? So I think already in August, by the time he sent me the paper, he'd already implemented it, and presumably there was some bug testing and stuff. And then he released the source code in January 2009, or maybe a little bit earlier, but the network launched in January 2009. So I don't think anybody helped him, other than looking around at things he cited, like Hashcash, Merkle trees, digital signatures, a few building blocks, basically. But he didn't cite the other eCash systems except for Waydai's B-Money, but that was basically because that was my response to him. Hey, have you seen B-Money? It seems related to what you're doing. So he added that as a citation. So it's hard to tell, but it seems like he wasn't actually aware of those systems. So, people are interested to claim to be involved, but actually it seems like he did it all by himself.
So incredible. And what an incredible gift to humanity. I think there is something, I don't want to get deep in this conversation, but there is something to be said about a creation like Bitcoin not having a public figure as the founder. It is certainly gives, not only is it great media and great mystery and great story and great conversation, but it also gives almost more credibility to Bitcoin because it's not about this person out, flaunting and talking about themselves and everything they've created. So shout out to Satoshi, wherever you are, whoever you are. We appreciate you endlessly. Thank you for your contribution to humanity. Okay, I want to switch, Adam, to talking a little bit about stories of today, which is Bitcoin is really benefiting right now, it would appear, from all this macro mayhem. There seems to be with all this macro mayhem, there's obviously gold is doing very well. There's a lot of people, a lot of investors moving into gold, flight to safety, go to the risk off asset. And we've always talked about Bitcoin as a risk off asset because it is digital gold, but it's never traded like one, at least not for the past 5 years since the COVID stimulus in the US. That's for sure. It's traded like a high risk asset, really correlated with US tech stocks. Just yesterday, recently, this week, Bitcoin's 200-day moving average passed $46,000. You tweeted about this. What does this signal to you?
Yeah, it's an interesting metric because people are always living in the moment, in the short term, and it's approximately a 4-year average. So it's kind of slow. It's the dark line underneath this, and then the dotted line is the current Bitcoin price, right? Log scale. So you can see it's up only. So literally, it's only ever gone up, which is nice. And so it's kind of the floor price. You can see that it went under it a bit during the COVID market turmoil, but generally speaking, even if you look previous to that, even in the bottom of the bear market, it barely scrapes. I think the claim before is it had never closed a month under the 200-week moving average. So when it dipped, it happened to be not at the end of the month, let's say. So generally, it's a kind of, I think it's a good way to manage, emotions about volatility. If you just think about the dependable price of Bitcoin being the 200-week moving average, then everything above that is like froth volatility. Then you won't be so affected by short-term price movements. And it's coming up fairly fast at the moment, right? It's putting on another 1,000. I put another tweet on the chain, put another screenshot every time it crosses it. It doesn't seem like it was many weeks since the previous one. And so it's a nice metric to think about, kind of floor price for Bitcoin. And of course, you can't buy the 200-week moving average. There's no,
no.
Otherwise it'd be a fantastic thing to buy. Look at
it would be a good thing to buy.
Up, right?
Yeah.
Yeah. I mean, you can kind of buy it, like you can, it's an average, right? So basically you would create it by, buying 0.001 Bitcoin every week or something. But the problem is you also have to sell the week 200 weeks ago because it's the rolling average. Anyways, you could. It's a nice thought experiment. If you could buy this instrument, it'd be fantastic, but you can't. And it seems to be very difficult. Like if you try to create it, it's going to be so attractive that the funding rates would kill it or something. Because if somebody has to sell it to you, and that person is a hedge, that's not a fun thing to hedge.
I wouldn't want to hedge that. Look at that chart.
Right.
Let's talk quickly about Bitcoin right now. What's your thoughts on where Bitcoin is at? I mean, obviously, this conversation would have been very different if we had this a week ago because we're in such a volatile macro market. So I don't know if you feel free to comment on the macro side if you want, but I'm curious on where you think Bitcoin is in the bigger picture of where it is now and where it's going. Do you buy into this narrative that it is decoupling from US equities currently, that more and more people are truly seeing it as digital gold and a risk-off asset?
Yeah, it seemed like it was getting a bit correlated for a while. And then, of course, if you zoom out, people look in the short term. If you zoom out, Bitcoin obviously has decorrelated because it's up, like 6 times or so since the bottom of the bear market, right? 15,500, not that long ago. And the stock market hasn't done that. It's gone the opposite direction, right? But there was a day where, basically Bitcoin jumped, I don't know, like 5%, and the stock market moved in the opposite direction. So it's a complete, they moved in a completely opposite direction. So that kind of broke the assumption a bit about the correlation. And so, yeah, I think it may increasingly decorrelate. And I think the reason is that, you've got some fundamentals, and the fundamentals are very bullish. There's a lot of positive things happening for Bitcoin. So in a lot of ways, I think Bitcoin is underpriced at this point, given, all the things that have happened since it was 69,000 a couple of years ago. So 93,000 isn't that much higher than it was then, but now we have the US government reforming all the regulations. You've got banks allowed to custody, you've got spot ETFs, you've got institutions making announcements every week or two, you've got sovereign wealth funds buying. Like yesterday, there was something about SoftBank, Tether, and Bitfinex starting another strategy company. So there's a lot of positive things happening, and I think people think about institutional adoption as kind of big faceless corporations buying, and they're not sure if they even want that. But I think the point is that the institutions are just professional money managers, mostly managing, savings plans, pension funds, life insurance policies, maybe which is just the savings or different types of financial things that the individual relies on. And most people are not, trading stocks or managing their own trading or talking to a broker. They have their share exposure as via, their life insurance or their pension plan or something like that, right? And then universities have an endowment, which is kind of for the benefit of the students ultimately. And then you've got the sovereign wealth funds, but those are managing the wealth of the country directly for the citizens, right? So you just think about it like that, and the institutional adoption that there is, I think, is actually very small percentage. So there was some news that one of the Abu Dhabi UAE sovereign wealth funds bought about 450 million Bitcoin. People go, wow, that's amazing. But it's those UAE sovereign wealth funds are enormous. So it's a fraction of a percent actually.
It's a drop in the bucket for them.
Right, and I think the other thing is, because most people are not managing their own money, the institutional money managers managing pension funds and so on are managing a lot of money. So if they go from 0 to a couple of percent or to 5%, and they form a thesis about why that's the right thing to do, and those funds are often very long-term managed, so the money will be in there for 5 years, 10 years, 20 years, like it's a pension plan or something. Then putting an allocation into Bitcoin is pretty smart thing to do, really. If you look at the history, right? It's outperforming asset class for 15 years. The guys are behind the curve, right? It's time to catch up. And it sounds like they're starting to do it, but it's a little bit slow, right? Because they've got a lot of processes, due diligence, and actually at Blockstream we hired this guy Sean Bill, who's a hedge fund manager, but he also ran a pension fund for a decade, and it's a US pension fund. It's the first public pension fund that put Bitcoin on a pension fund balance sheet. And it took him a couple of years to get that through. And it's all very new, right? That was we started in 2019. It took him until 2021 to get it in there. But the conversation's moved on since then, because now the Overton window has moved, right? You've got the spot ETF since then. You've got new people in the administration, a lot of Bitcoin enthusiastic, financial experienced people, new people in the SEC, improved regulations, repealed regulations or friction to banks adopting Bitcoin or offering Bitcoin related services. There's really a lot of things happening. Now, of course, it doesn't happen like the same day they make an announcement. It might take them 6 months or something, right? But there's a lot of things coming through, and I think the Bitcoin market is quite reflexive, right? I mean, we saw that the other day, right? It jumps almost $6,000 in a day, and people forget the statistic that if most of Bitcoin's gains historically have been in 12 trading days per year. So that's why you need to hold, because if you miss those, it's not so much fun to hold, to invest in Bitcoin. So
Yeah,
best bet is to stay there.
Which is why DCA is, one of the simplest and best strategies for Bitcoin, because if you try to time it, you might miss it. It's just keep it simple and keep on stacking and keep on buying. I want to chat about Bitcoin price for a second, because you mentioned, and I would agree with you, that it feels undervalued right now. And I just want to take a look. The Milk Road team put out a tweet about this just yesterday, when they were basically talking about they used, I don't know if you've seen Michael Howell's pie chart of what the core factors are that impact Bitcoin's price. Have you seen this before?
No, looks interesting though.
So he breaks it down as 40% is global liquidity, 26% is the gold price, 11% is gold to Bitcoin ratio, and then 22% is sentiment, investor risk appetite. And as the Milk Road Pro team says, that's the problem child right now, is that the investor sentiment right now is so bad as a result of the macro and all of the tariffs that are happening. Everyone's lost confidence in the markets currently, and there's just so much uncertainty. So a lot of people are standing on the sideline. But when you look at these other three factors, and let me just walk you through them and would love your thoughts on these. First is, if you look at the Bitcoin to gold ratio, look at this chart, right? Ever since January, the Bitcoin to gold ratio is just going up. This is since January 2023, sorry. It's just going up. So right. But you see where we are right now, we're in this big weak downtrend, right? So Bitcoin is definitely, the price of Bitcoin is going up relative to gold, but look at this downtrend we've been in since basically late December of 2024. Big downtrend, and we're about to hit that line. You would assume, okay, lots of room to move up there. Global liquidity, another chart that everyone loves to look at when talking about Bitcoin, right? Bitcoin typically lags global liquidity, M2. Well, look at this. M2 has taken off. This is a 12-week lead that M2 has in the way they present this. And here's Bitcoin down here. This is usually the bottoming zone. Okay, great. That would say we're ready to take off. And then, of course, gold price. Well, everybody knows what's happening with gold right now, all-time highs. Gold might be the one that might be overbought now, because everybody's been piling into it so much over the past few months. So what does that all translate to? Well, 3 of these 4 factors are very positive right now. And once we settle this one, once we have some certainty in the markets and some investor confidence come back, ideally as a result of some sort of end state to the tariffs, where we just know what's going to happen, then you would think, hey, Bitcoin's kind of a balloon being held under the water that could be ready to explode. What do you think?
Yeah, and I mean, you can see that the risk appetite improved the other day when Bitcoin price jumped. And I think, like with stocks, when there was uncertainty, people will reduce leverage or fall back to cash and sort of wait for a direction. So I think the recent shift in correlation and Bitcoin jumping up so rapidly is probably means there's more dry powder and leverage access available than would be normally the case for a Bitcoin market move. So we'll see if it holds, but it only takes another day like yesterday and we'll be at 100k. It's 6 or 7k away from that right now, right? So it doesn't take much for Bitcoin to move significantly, and once it does, then people follow, and that applies to ETFs, and it's sort of reflexive partly because of the news cycle. The fact that the price is up is news, and then the brokers and financial advisors call their clients, or they see it on financial news shows, and then they call the broker and try to buy, right? So there's a lot of people that will buy things that are going up, and so that's one of the things that can happen. And if the decoupling holds, that could give people a reason to start treating Bitcoin as a growth story an adoption story plus the correlation. So the other parts of it, the potential upside, the historic growth per cycle averages, and the fundamentals, all the kind of institutional indicators, and the treasury companies. Like there's a lot of, every few weeks there's another existing public market company says, they just bought some Bitcoin. There's some new.
There's a new one.
Companies.
The current ones are still buying. Metaplanet, Michael Saylor, MicroStrategies.
They don't stop
we have
either,
new ones.
Right? Yeah. I mean, you can see some interesting. I mean, one way to look at the amount of Bitcoin that these different persistent buyers are buying is to look at the so the ETFs bought since the halving 2 times as many Bitcoin as have mined on a daily basis, right? So it's 450 Bitcoins mined, so the ETFs bought 900 Bitcoin a day roughly, and MicroStrategy also bought 2 times, and there are other companies, and they're continuing to buy, right? So one of the puzzling things was basically who's selling. The price is going down, somebody's selling, but there's maybe 5 or 6 times as many coins being mined as are mined, being bought up systematically by these different entities. So I think another factor is the coins left on exchange that are tradable. The ETF buyers apparently are sticky. They buy and hold. They don't sell very easily, so that's good. So once the available coins that people can buy dries up, you get what people are talking about as a supply shock or a supply squeeze, and that could have some rapid effects too.
And you get the God candle or the Omega candle that everyone loves to talk about and make memes about.
Yeah, I mean, the so-called God candle is like $10,000. I think we just about had one of those in the last 3 months.
True.
I mean, I think you technically it should be, depends how you count it, right? If it's from the close of one day to the close of the next day, then we didn't quite make it. But in terms of 10K move within a day, we had that. And yesterday we had half of one, like $5,800 move. So
it's tough to complain
Bitcoin
about
gets
that.
bigger. Yeah, I mean, right.
Okay, I want to touch more on institutional adoption and what you're doing at Blockstream and who you're working with behind the scenes and what you're seeing in terms of more buyers coming into the space. And I also want to talk about where you see Bitcoin price going from here. But before we do that, we just need to take a quick moment to hear from our sponsors who make this show possible. Let's be honest, everything in crypto comes with fees. But here's a nice surprise, MoonPay Balance doesn't take a cut. You heard that right. No MoonPay fees when you buy or sell crypto with your MoonPay Balance. Top up with dollars, pounds, or euros, then you're ready to trade instantly whenever the market moves. And if you change your mind, withdraw your cash. No MoonPay fee there either. Simple, fast, ready when you are. Check it out at milkroad.com/MoonPay. Today's episode is brought to you by Coinshift. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security. Backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Stakehouse Financial, put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on-chain, including Aave, Gitcoin, and hundreds of leading institutions, CYCS-USDL is gaining traction at milkroad.com/Coinshift. Okay, welcome back. Adam, where do you think, what are your expectations on where Bitcoin goes from here for the rest of this year or the next 12 months? Do you think that we have still more volatility to come over the summer? Do you think that we're going to end the year higher? Do you have a price prediction you want to share with us?
Yeah, I mean, you got to bear in mind I'm one of the perma bulls, so I'm always astounded that Bitcoin is as cheap as it is. And so I think one of the debates at the moment is the diminishing returns theory. So if you look at the previous 2 or 3 halvings, the percentage increase is it has gone down. But I think that is partly because of the COVID and the supply chains and the money printing and the economic effects of that, right? I think the last halving was kind of cut short by that a bit. And, the fact that we had an end of epoch new all-time high, 73.5, just before the halving, it's kind of, I viewed as a kind of confirmation that, it would have gone higher if not for all of those headwinds. And so, I think it's probably incorrect to draw too many inferences from the last cycle. And so, if you take that out, I think that there's a lot of positive news that $100,000 is way too cheap, and so I expect we'll end the year much higher, and we get between 500,000 and a minimum and a million during this cycle. So we'll see if that transpires. And I think the other thing is, people talk about diminishing returns, and you've got the different models. I mean, models are not necessarily that predictive, but stock to flow, power law, various other models, and they are this diminishing return theory. Like technically an S curve, like adoption of internet, adoption of mobile phones when they first came out, things like that. They go through a gradually phase where it's kind of niche thing and it's expensive and very few people have it, and then it becomes a social phenomenon when everybody has it, and the adoption starts to get steeper, right? So it could almost be the opposite, right? People are calling for diminishing returns, but maybe there are 100 million people with some form of Bitcoin exposure. That can reach a tipping point when there are a few more people that have it, so that everybody's talking about it, and they're starting to use it. They get their friends into it. It's kind of network effect, right? So there's every reason it could actually go in the opposite direction and start, doing the opposite of diminishing returns, like start growing faster. And the institutions are another form of adoption. ETFs are another form of adoption. And of course, the sovereigns, that's a whole different topic, right? If the US eventually does something on a bold scale, a program to buy 1 million Bitcoin, or the Bit Bond plan, which is pretty interesting, to kind of mix Bitcoin buying with a treasury bond, so you have a kind of money back, a repayment guarantee from the US government, but some Bitcoin exposure. I think that's pretty interesting. So if one of these things happen, I think that changes the picture as well, because other governments would, they'd have to react, they'd have to figure out what they're going to do. And it's very hard for a government to do things quietly. And, you can only, you can't buy OTC in unlimited quantity, because the OTC sellers run out, and then, everybody's buying on their exchanges, and then you run out of Bitcoins and the price gets higher. So I think, the 500,000 to 1 million is without, the US government buying, just not selling what they already hold through seizures and things like that. So we'll see what happens. But even with just the overturn window move, the US government, the most liquid stock market in the world, a well-regarded regulator internationally, is actively talking about acquiring Bitcoin. Is like, crazy. Nobody would have believed that 12 months ago, right?
Yeah, it's completely crazy, and I think it is news that has gotten a bit lost and a bit forgotten, because we've gotten so focused on tariffs and obsessed with whatever Trump is going to tweet next, that we almost forgot that Trump said, hey, he set a committee. He said, figure out how to go buy Bitcoin and give me a report by, I think it's July 23rd is the date when they have to submit a report with a plan of how to buy Bitcoin. And as you said, there's many ways they can do that. There's Cynthia Loomis's plan of buying 1 million Bitcoin over 5 years, which would obviously be absolutely massive if that was what they went with. There's the Bit Bond plan. There's other, budget neutral ways to buy Bitcoin. There's even just them saying that they're not going to sell it, which Trump has basically said that at this point. These things are, it feels to me, we had Matt Hogan from Bitwise on the show a few weeks ago, and he really said it best, is it was the last check mark that Bitcoin really needed, was that, hey, governments are going to support this. So that was the last risk that really stood out there. And it's very clear that governments are going to support this. We don't have them all buying it yet, although, you have Bhutan, an incredible story of what's going on in Bhutan. And I'm sure a lot of other countries are looking at Bhutan and saying, okay, why are we not doing the same thing? Thailand, I'm pretty sure, is going to start buying soon. It feels like that's coming any day now. I think there's some alpha that I've heard from behind the scenes about that. So it just feels inevitable. Like, it just feels inevitable. And, your chance to get in before all of them is running out, quite frankly. And this tariff situation could be a bit of a gift. Like, the fact that we could buy below 78K and we dipped even, how low did we dip? Did we dip? I think we might have wicked down to 69. Like, that's
I think it was like 74 and a half or so, something
74
like
and a
that.
half.
Yeah.
I think I'm dreaming about 69 because that's what I want to buy it at.
Yeah. Well, I think, that's where the dollar cost averaging comes in, right? Some people, selling Bitcoin is being short Bitcoin. That always makes me nervous. Hate selling Bitcoin. So yeah, and that's always the risk, right? That if you were to sell and the price jumps as it did yesterday, then what do? You buy it back at a higher price, right? Or you get stuck on the sidelines, which people sometimes do.
Let's talk a little bit about your work at Blockstream and what you are doing in order to expedite the adoption of Bitcoin around the world, who you're working with, and what you're seeing from behind the scenes. You would speak to institutions and TradFi on a regular basis, which I'm sure would give you an idea of what they're thinking, even though maybe they're not all, as you said, taking action yet, because it's a much longer time frame for them to take action than it is for a retailer to just all of a sudden decide to go and buy.
Yeah, of course, you see the news of the different financial institutions that are trying to get to market to offer Bitcoin-related products to different types of investor, and we are more talking with sort of pension, the slower moving ones that are quite conservative, like the pension funds, endowments, family offices. So the family offices are a bit more agile, obviously, because they can make their own decision. But some of the other entities are quite cautious, and they have a responsibility to manage, lots of individuals' savings or pensions and things. So they take it seriously, and it takes them a while to agree on the processes and, think about how to invest in Bitcoin, whether that's a small percentage or some kind of product that is less volatile, sort of a de-risked Bitcoin, which is also another way for people to participate.
When you speak to them, what's the typical conversation? Is it you explaining Bitcoin to them and explaining its properties and its traits and giving them the investment thesis? Or is it more they already buy into the investment thesis and they're trying to figure out the how?
Yeah, the impression you get is it's still early. And what we were saying a little earlier about the fact that the US regulators are now being open for business, improved regulations, that matters to this audience, and that the US government itself is, talking about sovereign reserves. Those kind of things are, a green light and legitimizing in their eyes. Now, for us as people who've been interested in Bitcoin for a long time, we don't need that, or maybe some people are not sure how they feel about it. But for the that kind of more institutional audience, it helps them get approval to do it. And sometimes the fund manager is, the allocator rather of the funds is enthusiastic, but he still has to go through the process and get like committee approvals and things like that. So, there are some kind of lower risk ways for them to participate as well. Like they're doing diversified things like asset-backed lending dollars against all kinds of different assets that are liquid. And so lending against Bitcoin is something they can do to participate in the Bitcoin market. So that's kind of one early thing. Interestingly, the family offices they can move more quickly. And we also have a low risk Bitcoin yield fund, which is interesting for treasury companies and for Bitcoin holders. Like there's been some high risk Bitcoin yield funds that offered high interest rates that failed in the last couple of years. So people are rightly conservative about that topic, but we're looking to provide the safe return, which isn't a very high return. That's the concept.
Before we start recording, and then we'll wrap up shortly here, you and I were chatting about the various investment vehicles that exist for Bitcoin and how there is more and more experimentation happening in this place, particularly on the corporate treasury side. And one that you were pointing out to me that is just picking up steam right now is the Blockchain group, which has basically adopted a sort of a similar strategy to MicroStrategy, but also a little bit different. Can you walk us through what they're doing here? Because it's very interesting.
Yeah, so it's an established software company, a smaller company on a Euronext Paris Stock Exchange. So it's a public company for some years. It's an independent software vendor, and they decided to dive into the Bitcoin treasury strategy. And so they, the rules for how you can raise capital are different in different countries, but they've done several novel things here. So one is they did a private placement, which is just a way to sell shares. So that's quite conventional. And then more recently, in early March, they did a much bigger Bitcoin raise and bought, I think it was like 580 Bitcoin or something like that, which increased the Bitcoin they held by a factor of 14. So it's and they did it in a novel way, which is they issued a convertible note, which MicroStrategy has been big with. But this convertible note has a unique feature, which is that it's denominated in Bitcoin. So MicroStrategy is selling the convertible notes for dollars. These guys are selling that convertible note for Bitcoin, and the convertible note is a form of debt, with the option to convert if a certain price range is met. So in this case, if that price range is not met at maturity, which is about 5 years, I think, they'll give you the Bitcoin back. So that's one novel thing, and that's very high assurance because they have the Bitcoin parked with an independent custodian, and whatever happens to the Bitcoin price, they can give it back, right? And the other interesting thing, which I'm commenting on here, is it's just reached the conversion price about 7 weeks after they did this raise, which is pretty fast. So, and then I also did some rough calculations to see how that worked out. And because you're making a Bitcoin basis investment, if you put 1 Bitcoin in, you can look at, well, if you were able to convert, it has to stay at this level for 20-day average, and sold those shares back to Bitcoin, or what is the current value of the shares, it would be about 1.3 Bitcoin per share. So it's a pretty good result in a short period of time. And of course, they're continuing, like the treasury companies do, looking for interesting ways to raise more. And the other cool thing here is that because you're investing in kind, like you're putting Bitcoin in, you don't suffer a capital gains tax. This is for French taxpayers, and I'm not a French resident, but people are. I'm sure there are many early Bitcoiners in France too, that they don't have a capital gain when they invest into the convertible notes. And there's another kind of rule if you take the tax advice, that if you hold the shares for 5 years, you can sell them, convert them back into Bitcoin after 5 years, also without capital gain. So effectively, it's a way to kind of mitigate capital gain on Bitcoin, which might have been bought, at $10,000 or whatever, right? So it's kind of interesting tax advantage structure, and many people in the Bitcoin space don't have any dollars or euros, right? So being able to invest with Bitcoin without triggering a capital gain is potentially interesting. And then the last thing they did, which is kind of fun, is they gave all of the shareholders one BSA, which is, it's an acronym, but it's basically a 12-month option to buy their shares at 54 cents a share, and they're now like 72 or something, right? So the point is they they granted it, right? So they just gave you an option, and you can trade it. It's been listed since 11th of April, I think. So you can trade this option. It has a value. If you count the current value of the option, it's another 8%. So that's like 1.38 times, not 1.3 times, compared to Bitcoin in. And people are trading it, but ultimately somebody, assuming it expires in the money, somebody's going to use it to buy AltBG, like the blockchain group shares, and that will give the company more money, which they will then turn around and use to buy more Bitcoin. So kind of interesting incentive, right? Give somebody an option to buy the shares, and if it's in the money at expiry, then the company gets more money to buy Bitcoin. So that's kind of interesting, and they're going to give those same options to the converts once they convert as well. So there'll be even more of them on the market.
It seems like where's the risk? Where's the downside? It seems like a win-win. Is there risk? Where do you see the?
Well, I mean, there's always
risk?
a little bit of risk in not holding your Bitcoin in a cold wallet, but but they're using an independent custodian that I'm sure it's a good brand. Presumably it's in the document somewhere, and so it's fairly ring fenced. It's in a separate subsidiary. They're not going to spend it to operate the company if they have a down quarter. So it seems pretty low risk, and their ability to repay the convertible note. I mean, for most Bitcoin investors, it's pretty unlikely, to say the least, that Bitcoin will be at a lower price in 5 years' time. But if it never reached the conversion premium, which is already tagged, right, then in theory you've got that downside protection, which is give you the Bitcoin back. Plus, you've got this. If you're a French taxpayer, you've got this tax scheme. I think you have to do something like put it in some kind of account to benefit from this, but then you've got this kind of tax planning advantage, which even if it didn't convert, might save you a bundle on capital gains, right? So it's it's very interesting, and of course it's making intelligent use of the specifics of its local market. So we'll see how they they progress, but it's looking pretty interesting so far.
Adam, absolute pleasure to get you on the show today. Thank you so much for your time and your contribution to Bitcoin over the many decades that you've been working on cryptography.
Yeah, thanks for having me on. It's always fun talking about the Bitcoin ecosystem and markets.
It's a good time to be chatting about it. Everybody, thank you so much for listening in today. Before I let you go, I've got to remind you that we have got a sale on Milk Road Pro right now, which is our premium product. You get a weekly report directly into your inbox, breaking down charts of what we are watching within crypto, whether it be specific assets or whether it be the macro environment, how we're allocating our portfolio. If you want to be invested in this space, you definitely need to go pro. Also, you get access to our community where you can talk to myself and the rest of our team every day to make sure that you are investing with confidence, because we know that this is a scary space and there's lots to learn. And so we want to make sure that you've got a team behind you that is supporting you. So hit the link in the show notes, 20% off today, plus a money back guarantee. Thanks for listening in, everybody. Have yourselves a wicked awesome day. We'll see you again tomorrow.